Let's begin our analysis of a crucial topic for any business, managing tax returns. In this explainer, we're going to break down the core processes for establishing and maintaining a fully compliant system. Our review is grounded directly in the provided source learning guide. Here's how we'll structure this briefing. We'll start with the core concepts of tax management. Then we'll move into the practical steps, establishing an accounting process, maintaining the correct records, and meeting lodgement deadlines. We'll conclude with the key compliance takeaways. So let's start with the fundamentals. Before detailing the how, the source guide stresses the importance of understanding the what and the why. These core concepts really are the foundation of sound financial management and are essential for meeting your compliance obligations. According to our source material, effective tax management is a system built on a few key pillars. The terms you see here, lodgement, records, compliance, deadlines, and accuracy, are the essential components of a functional framework. We'll be touching on each of these throughout our analysis. Now, with those core concepts in mind, how do we put them into practice? This brings us to Section 2. Here, we transition from theory to application, focusing on what the source material identifies as the absolute foundation of compliance, a reliable and structured accounting process.
So why is having a structured process so critical? According to the guide, it delivers 4 primary outcomes for your business. It drives accuracy, making your records precise and reliable. It ensures compliance with all Australian Taxation Office rules. It creates efficiency, which prevents last-minute scrambles for information. And finally, it provides a clear view of your financial health. The source guide breaks down the entire lodgement process into these 7 methodical steps. It starts with gathering information and updating records. From there, you move to the crucial phase of reconciling accounts before you prepare the return. The process then requires a vital review and verification stage, which precedes the actual lodgement. The final step, keeping records, is just as important as the first. Now, for that 7-step process to work, you need the right documentation. The source identifies a set of essential documents that are considered non-negotiable for any tax lodgement. This includes everything from sales and purchase invoices to bank statements and payroll records. These items provide the verifiable evidence the ATO requires. Having the right documents is one thing, managing them correctly is another. This leads directly into our third section, which is all about the ongoing discipline required to maintain accurate compliance records for the long term. At the heart of good record management are your organization's record-keeping policies. As the source guide defines them, these are the formal procedures that ensure your financial records meet all legal and regulatory obligations, particularly those set by the ATO. Their purpose is to standardize the approach and guarantee compliance. To ensure those policies are effective, the source material specifies the types of records you must maintain. This level of detail is crucial, covering everything from major sales invoices right down to cash register tapes and petty cash records. Every transaction requires a clear paper trail. And how long must you keep this paper trail? This is a critical point from the guide. The Australian Taxation Office mandates that all business records must be retained for a minimum of 5 years. This is a non-negotiable compliance requirement. So you have the right records, and you're keeping them for the required length of time. That brings us to our 4th section, which covers the other critical piece of the compliance puzzle, meeting your lodgement deadlines. This is one of the easiest ways to attract penalties. The learning guide makes it very clear. A lodgement schedule is a critical tool for tax compliance. Its purpose is to track submission deadlines for your business activity statement, or BAS, and your installment activity statement, or IAS, to help you avoid costly penalties and interest. This table, drawn directly from our source material, lays out the standard quarterly BAS lodgement schedule. As you can see, the deadlines are fixed. For instance, the Quarter 1 reporting period, from January to March, always has a due date of the 28th of April. Knowing these dates is the first step. Beyond the quarterly schedule, the guide also highlights other key deadlines. For businesses lodging on a monthly basis, the BAS is due on the 21st of the following month. The annual GST return, meanwhile, typically shares the same due date as your main business income tax return. It's imperative to track all of these. We've now covered the process, the records, and the deadlines. This brings us to our final section, where we'll synthesize everything into a clear summary of actionable takeaways for your business. So what are the most crucial takeaways? The source material presents 4 essential actions. First, establish a process that is clear, structured, and repeatable. Second, maintain your records diligently, ensuring they're accurate and kept for the mandatory 5-year period.
Third, meet your deadlines by creating and adhering to a lodgement calendar. And finally, use the right tools by leveraging accounting software to automate and monitor compliance. And that brings us to our final point. After reviewing these core principles from the source guide, the essential question becomes, is your own compliance framework truly prepared for regulatory scrutiny? A point for consideration.